Good morning, traders. It is Thursday, the 30th of June, 2022. It's 8:02 a.m. Chicago time. This is episode number 2263. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the overall market sentiment, according to this Convergent Trading pre-market summary sheet, again, you can get a snapshot of this every morning by following twitter.com/conf trading. The overall risk posture is risk off. We have the German DAX and the Euro stocks pushing down. The retail sales number out of Germany was just really bad. Came in at negative 3.6, was expected at positive 2%. This is the retail sales in May for year on year. A really huge miss there. We got a bunch of numbers out of Great Britain. We had retail sales out of Switzerland, much smaller market, of course, but came in much better. The inflation rate out of France came in worse. Came in at 5.8%. The prior's 5.2, expecting 5.6. The unemployment change out of Germany's plus 133,000 was expected to contract by 5,000, so that's pretty good. And the unemployment rate jumped up to 5.3% from 5% prior and 5% expected. The unemployment rate in the Eurozone, 6.6% versus 6.8%. And then the big one this morning that really pushed us higher and only for us to fall back to where we were is the PCE price index year on year. Came in at 6.3% in line with the prior. The expectation was higher at 6.7%. Month on month came in at 0.6%. The expectation is 0.9%. So better than expected on the price index. Personal income came in stronger at 0.5% versus 0.3%. Personal spending came in quite weak at 0.2% versus 0.3%. So what we saw there is less pressure on pricing. We saw income get better, and then we saw spending contract as consumers hold on to their money. This morning, in terms of risk events on schedule, we have ECB's Lagarde at 9:30 Eastern. That's right at the cash open. We have Chicago PMI, which is sent to the public at 9:45 Eastern, but comes out to subscribers around 9:42. So we may see a flutter there. The expectation is 59.1. This can move the market. Recently, it's been quite tame. This evening, we get the Australian S&P Global Manufacturing PMI final, not a significant number, and then we get the Tenkan Large Manufacturers Index out of Japan, and then the Kaikshin Manufacturing PMI for June, which is a significant number for China. This evening at expected at 50.5, and that wraps up the risk events. The big theme is that across the board, we're seeing slowing. We're seeing slowing in growth globally. The market's responding to that, pushing lower. I want to remind you also that we have today, we have month-end, quarter-end. With the close today, the close is expected to be relatively volatile, relatively violent in its movement. So be careful trading the cash close today. It's likely to see some pretty strong movement with the rebalance. There's quite a bit expiring tomorrow in terms of options. And so we're likely to see quite a bit of action on the close. So just remember to kind of be conservative into the close today. Remember, your job is managing risk first. In terms of key earnings, Walgreens this morning in the pre-market, in the pre-open, Walgreens beat on earnings came in at 96 cents a share versus 92, and it beat pretty decently on the revenue, 32.597 billion versus 32.06. We also got Constellation Brands, and then after the close, we're expecting Micron Tech. EPS there expected at $2.44. Let's turn our attention to the S&P. The S&P is in a B-shaped profile this morning, really a long liquidation profile. We've moved very quickly from yesterday's close and have settled down and have been consolidating in a very familiar area, and that is the range between 37.80 and 37.60. With the point of control 37.70 half, as you see in front of you here. Quite a bit of volume in today's overnight session and really good range. So expecting this to be a relatively active session here. Now, what we've done is we've broken. Yesterday was just, I'll talk about yesterday. I'm going to try not to complain too much, but yesterday, complete balance, just absolute balance. And then we broke down from where we were on the gap up from last Friday, and we broke down into the prior balance. And the point of control, this balance, as mentioned before, is 37.75. So look at these stats in front of you. Inventory's 97% short, 97% short. The range 64 and a quarter points. 64 and a quarter points, and so that's likely to translate into the next session. Let's take a look at the charts here. Here we go. So what did we do? So let's look at the TPO chart for a minute. TPO chart, we gap up. Here's the gap. Oh, let me fix this. Yesterday, I was struggling with this screen, and it turned out my keyboard stopped responding. I had to unplug and replug. Kind of annoying. So we gap up. We close strong. The next day, we gap higher, right? So this is Monday, Tuesday, or Friday, Monday, Tuesday, Wednesday. And so we gap up on Friday, leave a gap zone below. We close very strong on Friday. We drift up as expected. We drifted to 39.50 in the overnight session. We end up finishing inside of Friday's range, completely balanced session. The next day we open in balance. We talked about this in our Trader Bite. We opened just above balance. We did not test the 90 here, and we shifted to 39.10 on the point of control. The expectation is a test down and a push higher. Tested the 50 here again. The 50 had an iceberg. Nobody was coming through there. And then we start to sell off. We talked about this at length. A very meaningful sell-off on Tuesday, and then yesterday, complete balance, absolute balance. It was so balanced that it didn't take out the initial balance stat. The initial balance stat says historical probability is that we would break. There's a 90, I don't know where it is now, maybe 96%, 95, 96%. If historical days going back, we would break the first hour's high or low. Break it, not touch it, but break it. Okay. So on any session, we are very likely during the session to break the first hour's high and low. And yesterday fell into the negative side of that. Fell into the 4% side, 4 or 5% side. It just would not break out of the IB. Completely balanced, and just ugly all around. So we settle in at 30.21. If you recall the prior session, we settled in at 30.25.50, something like that. And we just held this balance. And the idea was yesterday was we would test. And I kept saying, 38.08, but it's really 38.06 is this double top. 38.08 is the prior month's low, and the expectation is we would test a 38.08, and if we held it and pushed up, that would have been scenario two, and scenario two would push us back higher. And yesterday, 38.40 closed, shut the door. 38.40 traded quite a bit and had more. Another iceberg there, so just completely shut off the buying. And then the market ended up just kind of sitting in the middle. It tested the double top here. It poked through by a little bit. It tested the double top by about 3-4 points, stayed above 3,800. Couldn't find any motivated sellers to keep pushing down, and then it ended up turning and pushing all the way back up to the 38.40. It hit the 38.40, and it just found an iceberg there that was not relenting, and then it came all the way back to the low of the session, which was 38.01 quarter. Came all the way back, could not find sellers, motivated sellers, to keep it going. And then it ended up sitting in the middle, just absolute crap. As you can tell, yesterday was a losing day for me. So had a couple of good trades. I think one or two good trades right at the open, and I took 2 full stops. And none of my good trades ran the distance. They didn't give me the 3R that I'm looking for. So when the stops came along, they just wiped whatever was made on those good trades and those earlier trades, and I ended up down for the session, which I don't have any attachment to losing. I'm okay with losing, lose all the time, really. But I get stopped a fair amount. But yesterday was just so stereotypically clear that we should keep our hands off, and I kept going for that IB stat, and it just kept going a little bit and then stopping me out. So not my best performance. If we look at yesterday's action, Do you guys know what a seismograph is? That's what yesterday's action is, just a seismograph. Seismograph is a very sensitive measuring tool that senses movement in the earth. It measures earthquakes, any type of friction in the Earth's crust, and this is what it looks like, like that. This is what a seismograph kind of looks like, and that was yesterday's action. Look at that. Shut off at 38.40. 38.40 up here. Shut off at 01 quarter. Once the 38.40 was shut off, we had these strong whipsaws. Look at those whipsaws. And then it just comes all the way down to 0150. Now I sound like I'm in the military. 0150, all the way back, and then finishing basically in the middle. Completely balanced profile. And what kept me interested is that the delta kept going down, and then it stabilized, and then it climbed, and it just looked like balance that would fall into imbalance. Once we opened and moved away from settlement right away. Notice that the delta is controlled by the small lots. Large lots were mainly flat, and very large lots were mainly flat as well. We see large lots now rising, but the auction overnight was dominated by small lots, which are 9 lots or smaller in the S&P. This doesn't give me a lot of confidence in the conviction of this move. Yes, it's the overnight session, but overall, it's not likely to. We do have good volume, but it's very likely to snap back. Remember, the overnight inventory is like 90-something% short. What is it? It is 97% short. So I'm expecting a snap higher on the open to retest. Here's what I talked about yesterday. So I talked about several things yesterday that if we give up the '08 area, which was really supposed to be the '05 area or so, '05, '06, that the next, and we move into balance, that we are very likely to move into this area here. This area is dominated by 37.75, the MC point of control. And this is basically where we are. So we are back in the balance that we've had for most of the month of June, right in here. We're trading back in balance. So this was a basically a bear market bounce that has fallen back into the range. So now the market has to decide, is this cheap, or is this cheap? And now we can move back up and we can push towards the 39.10. 39.10, this is the new balance that we created up here. Do we push back through the 39.10, or do we fall through and go down back down to that 36.80 area? So this is what needs to be decided. Today being the end of the month, we may see some quite a bit of volatility. Who knows? I mean, the range and the volume already in the pre-market is telling us that there's likely to be some pretty good activity today, but the market has to decide whether it wants to bounce back up and retrade this balance down here or consolidate in here for today. But I'm very interested to see if they hold this bounce zone, or if they push through. 37.50 will give us a clue down below. The market's moving from 50 to 50 to 50, as you saw. So that's what's in play. Let's take a look. And I think the other piece that I talked about here, these are the scenarios. The first scenario is to test up into the 50. It ended up cutting off at the 40. Test up into the 50. Look for a short back down to 10.08. And then the second scenario is to test down into that 10.08. Really, it's '05, '06. And then bounce back to the 50. Yesterday did the first scenario as well as the second scenario. And I couldn't make money on either one. So that's just the truth. So let's take a look at where we are, really. So if you look at where we are, this is the area that we're back into, right in here. So we're trading this balance here. So we have to be very careful because this balance has been really traded and kind of washed and rewashed and washed and rewashed, and we're falling back into it. Very clear consolidation above, very clear double bottom at the '01 right here. As long as it holds this '01 or 3800 on a retest up, I'm expecting it to continue to be stuck in the magnet. The magnet is this purple area right here, which is at 37.75. I expect it to be stuck at the magnet. Once it starts to give up this stock zone at 37.45, so 50 is expected to be hit today. Once it gives up the 45, it is very likely to very quickly fall down into the 37.10 this morning. So it's really important. So we've moved from balance. We had imbalance last Friday. We balanced up higher. Then we had imbalance on Tuesday to the downside. Then we had balance yesterday. And then we are basically imbalanced in the overnight session back into the major balance. So the market has kind of made a trip up, found sellers. We saw those sellers really step in at 39.50 and then again at 38.40. 39.50 and 38.40. And then, here we are back in the middle of the range. Back in the middle of the range at 37.75. So being as we are opening in the MC point of control, this 37.75 area, I'm going to be watching. I'm going to be watching very carefully for a response from 37.75 back to 38.01, 3800, 38.01 for that structure. Remember, 38.01, we have 38.01, which is double bottom from yesterday. We have the 3805, 50, 05, 75. Let's call it 3806, which is the over underline. These are areas of key resistance. I would love for the market to test these to give me an opportunity at a short with some pretty decent risk reward back to 37.75. Hold through the 37.75, let it chop, and then let it start to challenge this 37.50. This would give us a pretty decent range to go for, 50, 55 points of range or so. That's what I would love to see. The market doesn't have to do what I love to see, but I'm expecting it to bounce up. The extent of that bounce is going to be watched very carefully in terms of how it's lifting. How aggressive is the tape versus price progression. If the tape is aggressive and price progression is not there, this is an opportunity to short back into the 37.75, assuming we moved away from it. Let it consolidate, and then I expect it to check the other side. That's what the market does. Remember, the market finds a price, okay? Finds a price and moves to it, consolidates at it, it accepts the price, and then eventually it tests one side, comes back, tests the other side, comes back before it decides. And at this point, it's sucking in more shorts and longs, and then eventually it breaks to one side or the other and it starts running, okay? Which is what we did here. That's what we did here. We consolidated on top of the 37.75. We traded both sides of that. You can see the action here. Multi-distribution profile. It's typical. And then it decided to break to the high side. Once it tested for sellers, it found the sellers at 39.50. Then it couldn't push any farther. Once it finds the sellers, now it is likely to turn around and find buyers. The way you find buyers is to advertise prices lower. If you had a car in your front yard you wanted to get rid of, and you priced it at $45,000 and nobody's looking at it, what do you have to do to get customers to come look at it, for the auction to work? You have to reduce prices. This is what the market is. It's an auction. It's not some HFT quant fund, whatever. The market pre-existed all of that. So the market is an auction. The execution is being done by machines, but in general, the market is an auction. Now, I've been trading this way for going on 17 years now, or 16 years, and it's just, no matter what the changes are, no matter what the advancements in charts and whatnot are, no matter what the product, it is still an auction. That's what we're here for, and I'm explaining to you this auction process during these Trader Bites. I'll leave you with that. This is a long one. Good luck today. Mind your risk. Please be careful on the close. Again, month end, quarter end. We have massive option expirations tomorrow. Be sure to be conservative with your expectations at the close. Good luck, and I'll catch you tomorrow. Take care.